Okay, so this video I'll walk through a few problems from Chapter 1 out of cost accounting, just kind of that introduction to what we use cost accounting for when making managerial decisions. So we have this Durham Parts that makes a variety of products, and they have two divisions, Eastern and Western. And the Western normally sells to outside customers, but on occasion sells to the Eastern division. When it does, the corporate policy states that the price must be cost plus 25% to ensure a fair return to that selling division. Western has received an order from Eastern for 1,200 units. Western's planned output for the year was 4,800 before that, and their capacity is the 6,000 units. So they have costs below for producing the 4,800 units. So our materials and our labor and our variable costs are not going to change no matter who they're making those for. So if we take the 50 plus the 24 plus the 16, their variable costs would be $90. So if we considered those costs only and we multiplied that by 1.25, and again, that's to the cost plus the 25%, those costs would be $112.50. Now, again, though, we've got to factor in these fixed costs as well. So that's where it gets a little bit concerning, or that's where the issue might come into play. So if we're the Western division, the one who's doing the selling, we want to include all those costs. So we want to add, so the 50 plus the 24 plus 16 plus 60, it's $150, and multiply that by the 1.25. That would be the $187.50 that we have here. So for the Western division, that is what we'd want to pay. Now requirement B says, okay, well, what if you're the Eastern division? So the Eastern division is the one I had calculated in the first place. So the 50 plus the 24 plus the 16, that $90, not counting in any of their fixed costs, multiply that by 1.25. And again, the 1.25 is saying it's 100% of the cost plus the 25% markup or increase. So then if you're the Eastern division, you'd say, okay, I want to pay you the $112.50 because I don't want to pay any of your fixed costs. Those don't vary based on us, buying those units from you. You still have to pay those. But then requirement C says, well, what would we really recommend? Like, what is the fairness? So then that's going to be a mix. So then that's going to come in and say, the 200, if we still got the 50, the 24, and the 60, but go down to that 288 of fixed costs. If we take the 288 and we divide that by the 6,000 units, then this $60 is not correct. It would be $48. So if we take that $48 plus the 50 materials, 24 labor, and 16 variable costs, we would have a cost of $138. Now multiply that by the 1.25, and that gives us the $172.50. So that's the fairest way that everybody shares a little bit in those fixed costs. Okay, then our next one, we have, again, looking at this cost data for managerial purposes. So Bates Courier Services provides delivery services in and around this Butte city. Its profits have been declining, and the management is planning to add an express service that is expected to increase revenues by $62,500 per year. The total cost to lease the necessary additional package delivery vehicles from a local dealer is $10,000 a year. The present manager will continue to supervise all the services at no increase in salary. So due to the expansion, though, there will be direct labor costs and utilities that will need to increase by 50%. The rent and the other costs will increase by 20%. So they give us the income statement below. So again, let me see. Can I take this away? Okay, so again, these would be the blanks so that you would be filling in. So if we just look at this status quo here, so that's what they'll give you. So then we're going to go ahead and say, okay, well, our current revenues are $190,000, but those will increase by $62,500. So we'll add that $62,500, and that is our new revenues with this express service, the $252,500. Our vehicle leases are going to increase by the $10,000, so we'll add that to bring it up to $85,000. Then the labor is going to increase by 50%. So then if we take 60,000 times 0.5, that is a $30,000 increase, and then we're going to add that back to the 60. If your calculator has the percent button, you could take 60,000 and then add 50%, and you'll get the answer. That percent button has to work the proper way though. So some, like my calculator, actually the one I'm using right now, doesn't. So, but if it does work that way, you could add 50% to it to get to that 90. If not, do it in the 2 steps. Take the 60,000 times 50% and then add that to get to the 90. Then utilities are going to go up also by 50%. So again, 10,000 times 50% gives us 5, goes up to rent is going to go up 20%. So that's 4,000. Other costs are going to go up 20%. That's 2,000. The manager's salary is the same. So really it's just a matter of kind of reading what happens and then putting those through mathematically. Okay, then our third example is a small business that specializes in appliance repair. They're known for fast, friendly service. Katie is the primary repair specialist and has technical college. She helped her father. She's got lots of experience. So she thinks she's going to be able to develop a training business that will complement the repair work. So she's put together some estimates on the training program, and she estimates that revenues would grow 30%, parts would increase 10%, labor costs would increase 50%, rent, which is based on revenue, would increase the 30%, same as rent, utilities would increase 30%, and insurance by 18%. All other costs would increase by 20%. So again, it's going to be, you got to go through and say, I think this one goes the other way. So this is what already includes all of those increases in percentages. So now you have to reduce them. So then you would take the 474,500, which is increased by the 30%, and then subtract that 30%. So again, the 474,500, or actually, you know what, probably the easiest way is multiply that by 0.7. Let's see if that no, that doesn't do it. All right, 474,500. No, that still doesn't do it. All right, let me go down. I'm doing my math wrong. Oh, so divide it. Okay, so that's what I'm trying to subtract it. But if you think about that, this already includes the 30% increase. So you can't just subtract the 30% because then you'd be taking 30% of the 30%. So what you have to do is divide by the 1.3, so the 130%. So 474,500 divided by 1.3 brings it down. And then the same thing with the parts, right? The parts are also those will increase by 10%, it says. Okay, so then we take our parts, the 110,000, divide that by 1.1 again, which would be 110%. That brings it down to 100,000. The labor goes up by 50%. So again, take the 180,000, divide that by the 1.5, and that brings that down to 120. The rent is going to increase by 30% and the utilities by 30%. So then the 52,000 divided by 1.3 gives us the 40. The 39,000 divided by the 1.3 gives us that 30. So this one was a little bit more tricky, and then I too kind of tried to do it like a shortcut method where I just thought, okay, I'll just subtract the 30%. So remember, you can't do that. If it already includes the 30%, you can't just subtract 30%, or then you're going to be off by 30% of the 30%. Okay, then we'll look back at it. So now as we total it out, her operating income is going to increase by what? So the 67,770 minus 53,500. So she's going to have $14,270 more in income. So yes, she should add that training to her current business.